Most of the great bubbles, the super bubbles, go below trend. It will be hard to prevent the market from declining to that level.
It's been a rough year so far for the stock market, and indeed the past few months have been especially shaky. After a brief bear market rally, it is quite unfortunate that the S&P 500 has fallen more than 7% since mid-August, as lots of investors and financial experts keep saying there is a high chance of being in a bubble. It happened before, and there's every possibility that that one coming would be worse than the previous. The great investor Jeremy Grantham has a lot to say about the current economic situation, especially when inflation is taking a toll on the economy. Are we getting closer to what we can call the bigger crash? What could come from it? With everything from groceries to gas seeing a ridiculous increase in price, Grantham also feels a crash that will change the generation, and it's coming. That's why we're here. In this video, we'll be talking about Jeremy Grantham's words and the main purpose of his words. Do we see ourselves in a recession already? Join us as we talk more about it. Watch this video to the very end and get ready for inspiration.
It only declined 50%. 50% is a hell of a big decline, but it was only enough to get it back then to trend. It will be hard to prevent the market from declining to that level.
Over the past year, the stock market has managed to weather the profound social and economic impacts of a global pandemic. Not only that, but it's also seemingly shrugged them off entirely. The disconnection between the real economy and capital market behavior has been a major point to discuss. There are also unprecedented efforts of the Federal Reserve to prop up asset valuations at all costs. Not a bad idea, though. It isn't too good that the cost of these interventions may prove even higher, according to Jeremy Grantham. The co-founder of Boston asset manager GMO, known for calling market bubbles, said in a note that the surge in U.S. equities from mid-June to mid-August fits the pattern for bear market rallies, common after an initial sharp decline. This will keep happening before the economy truly begins to deteriorate. Grantham sees more trouble ahead because of the dangerous mix of overvalued stocks, bonds, and housing. Grantham said that the Fed's actions have helped preserve the current bull market. This bull started more than a decade ago in the aftermath of the great financial crisis, far beyond its natural end. It's just a matter of time before the bull will eventually bubble. He said the long bull market since 2009 has finally matured into a fully fledged epic bubble, featuring extreme overvaluation, explosive price increases, frenzied issuance, and hysterically speculative investor behavior. I believe this event will be recorded as one of the great bubbles of financial history, right along with the South Sea Bubble, 1929 and 2000. These great bubbles are where fortunes are made and lost, and where investors truly prove their mettle. For positioning a portfolio to avoid the worst pain of a major bubble, breaking is likely the most difficult part. Every career incentive in the industry and every fault of the individual human psychology will work towards sucking investors in. But this bubble will burst in due time, no matter how hard the Fed tries to support it, with consequent damaging effects on the economy and on portfolios. These words center on the fact that we're simply in the early stages of a much bigger problem, and to further explain, we have seen unfavorable low trading volumes during the 2022 downturn thus far. If you're the type that compares the trading volumes of different world companies, you will realize there have been inconsistencies. So as a world-renowned investor, Grantham's remarks are sufficient to change market expectations. This can serve as a reflection of what is going to happen, and it's more like a reflection of what is on the verge of becoming an unavoidable reality. There is a big chance that stock prices could continue falling and may be headed toward a more embarrassing crash. Well, we can categorically state that the stock market in the United States is at an all-time high, but the truth is that there are insufficient current funds outside the stock market. It is obvious that many U.S. stock funds are pooled into the portfolios of just a few leading companies. Given this, the valuations of other companies are comparatively at a deficient level. To figure this out another way, well, financing funds have become much more complex and challenging. In fact, the Federal Reserve's monetary policy now appears to be conservative, which can only mean that the situation regarding liquidity is becoming increasingly tight. If you're observant, you'll realize that the prices of goods in retail stores have risen in the past 6 months, and this is surely an obvious indication. Now, let's say that there happens to be a more terrible financial crisis in the U.S., especially before the next stage of the economic recovery. A lot of countries will also fall victim. We know the market has boomed over the last year and a half, but despite different arguments and situations going around in recent times, the stock price is a sign of a massive market bubble, which might crash significantly. If this happens, it will cause a horrific crisis, considering the suffering inflicted on the people of America and numerous countries. Even if you go into the real estate market currently, you may still experience an even bigger bubble. All these happenings and signals suggest that something more terrible is still bound to manifest. Although inflation wants to be stopped by the Fed, sadly, everyone isn't on the same page with the Fed. Everything isn't going just right, but no matter what, it's best to get your investment strategies right. Fighting the Fed won't make anything better. This act alone even made California decide to offer an inflation relief payment to its citizens. But people went against this opinion because they believed it to be a ridiculous offer, as giving the so-called free money won't make anything better but will worsen inflation. World-renowned investors ridiculed the state's behavior. It doesn't just work like that. Grantham said, "I expect the Fed to go behind the curve, to be deep into optimism. It doesn't really have a clue about market bubbles and the damage they do when they break. If I'd been asked to bet, would the Fed get inflation wrong when inflation came along? At any time, I would have said, of course they'll miss it. They'll be late. Their responses will be pretty ill-judged. The Fed's record is terrible. Does this mean the vast potential of the human race is lost? Imagine all of the crime, plagues, diseases, and even widespread environmental destruction that is taking place. We can only be careful and look on how to save the situation." Grantham also claimed that it's an unwise decision to put all your treasure in one boat. He said it is best not to put all the capital into one investment, as several different investments give a portfolio resilience and the ability to withstand stocks. Clearly, the more investments you have and the more different they are, the more likely you are to survive those critical periods when your big bets move against you. This is why he has investment strategies that always help him, even when there is a market crisis. Grantham's investment strategy is built on the idea of mean reversion. He makes his investment choices by looking for irrationally priced stocks. As the market continues to fall, it's extremely important to increase one's human capital ideally. It has a lot to do with your education, financial knowledge, professional expertise, and even your health. No matter how this crash comes, things can still work out if you have a great plan. Having great strategies and skills will also be an addition and a benefit. When these things are considered, there is a high chance of having an absolute gain even when there is inflation, and these strategies will help increase one's financial opportunities. Well, that's all for today, guys, and we hope you did enjoy this video. If you're optimistic about the world economy, be sure to subscribe to this channel and give this video a like. Thanks for watching, and we'll see you in the next one.